Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, we had a nice update here today, although just kind of basically in a balance here. The Nasdaq was leading the way here today, but we'll see all of this on the S&P charts on the dailies. We actually had the crude here moving higher, gold, and also the bonds coming off some of the recent lows after the post Fed rate announcement last week Wednesday. But as always, starting off with the S&P 500s on a daily chart. So folks, a huge drop off in volume versus Friday's quadruple witching, and one of the things we're seeing here is another series of high handles, right? So we were talking about here a bit of like a high handle breakout right above the 22.15s, 22.15s in that area. And now we're kind of forming another little, someone might actually even call this like a bit of a pennant, but just basically a range, a consolidation forming over the last few days. You can actually see it a little bit clearer, more clearly, I should say, on a 15-minute chart. You can see here some of the highs are kind of winding down here. So we've got a series of lower highs and higher lows here, kind of basically putting in a bit of this pennant. One of the things I am looking for at this point in time is maybe just a small bit of support right around the 2250s, just from a horizontal standpoint, or a horizontal support standpoint. Bit of a gap there, some support, and also the support here coming in at the 2248s. So as we continue to wind down here for the rest of the year, I'd be looking for these 2250s to maybe offer just a little bit of support, but also looking at a 60-minute chart here, ladies and gentlemen, just kind of taking a look at this prior area resistance right around these 2215s or 2215s. That is one place that I would like to see the market hold. 2250s really short-term support, but this 2215s, that's a prior area where we broke out of. And as you know, typically when you break out of a resistance area, it should support the market the next time you come back down and test that area. So just be watching for those 2215s to hold. One of the things we are seeing here on the Nasdaq, let's flip over to the Nasdaq here. Nasdaq, instead of a pennant, just kind of putting in a bit of a range here, just sideways action, right above these 5400s, and just capping out right around 5460s, 5470s. So I'm just kind of seeing this on the Nasdaq, a bit of a range here. You'd be looking for this to break out as well. And as you can see here on the 60-minute charts, one of the things that you'll probably want the Nasdaq to do as well, in addition to the S&Ps holding above the 2215s, you'd ideally like to see the Nasdaq holding above the 5400s. It's a prior area of resistance. Then once you broke out of it, you had actually a couple of periods here of support right around the 5400 whole number. It's also one of those century figures, right, a whole number, $100 level. So that'd be important for here the Nasdaq to hold. So now moving over to some of our external markets here, we saw the gold coming off some of these lows. As we had mentioned here, a couple of videos prior, we were watching the gold starting to slow down some of its downwards momentum here. And, one of the things we said is while it does seem like the selling in gold is starting to slow down, meaning basically the sellers and the buyers are coming into a bit of equilibrium. We had the FOMC rate announcement coming up, and we said, look, that's a news-driven event. News is going to trump the analysis every single time. It's new information for the market to digest and work through. And basically what we had here is a signaling from the Fed and from Janet Yellen that we might have a few more rate hikes in 2017 than the market was anticipating or pricing in. And that, is going to be a bit of a drag on carrying gold, which does not throw off any normal dividend or yield on its own. So we saw the gold selling off in reaction to that. As you kind of put this on a weekly chart here, as we're starting to hang out lower below those 1200s now for an extended duration, it starts to feel like 1050s might be a likely place for the gold to visit over the next several weeks and months. I mean, this whole pattern here did not take just a few days to form. It's formed over a year and a half now. So maybe over the next several weeks and months we might make a trip back down to these 1050s to see if there's any buyers still in that region. Taking a look at the bonds, also the bonds pulled into this longer term support. So folks, we've kind of come into this area finding a little bit of support, and really that goes all the way back. If you pull it up on like a longer term chart here, you can see that I was looking at this these 123s here on the 10-year futures, kind of going back all the way to mid 2013 and 14 here. That was a place where the buyers came in to support the bonds. And then finally here, taking a look at the crude charts, we saw the crude charts hanging out nicely above those 52s. In fact, earlier last week we saw them kind of come in just a little bit to the 50 evens. One of the things I said the last time we tried to break out of the 52s is we just need to hold these 49.20s. That's the prior area that we were looking towards, a prior resistance point. So as long as that holds here as we look towards these pullbacks, that still points to a healthy attempted breakout here up and over the 52s. And again, this is also a longer term, bigger chart here that we're looking at, potentially on a higher move, potentially even up into the mid 70s. That's what this little reversal pattern or bottoming pattern, inverted head and shoulders, points to. As far as the individual equities goes, folks, it's been very quiet with the way the market's been trading. Basically all the stocks that have broken out still need to form some really nice flat bases. And then any of the stocks that we are seeing breakouts intraday on, what we are noticing is a lot of them are just fading down back into the breakout zones. Here's, just a couple of examples of these, breakout and then they fade back down into the zone. Another one was like the Netflix, right? Tried to break out, kind of faded back down. So one of the things, just be careful of, folks, when you're looking at these stocks, just keep in mind as the end of the year rolls around, it's going to make it a little bit harder to interpret volume. Volume does tend to dry up during this period. It makes it a little bit harder to discern the breakouts. But the most important thing here is that you have your risk control metrics in place, right? You have your setups, your leading relative strength stocks, breaking out of recognizable chart patterns. But even if the volume doesn't show up, if you still manage your risk, you have predetermined stops where you're going to sell your stocks and predetermined places where you're going to take profits. That will allow your trades to work in the long haul. Just follow your systems and your rules and apply them to the stocks that are breaking out of these recognizable chart patterns. But as we wind down in this year, we're going to be looking for a breakout of these pennants and these ranges here in both the S&P and the NASDAQ, and also look for these leading stocks, that are forming chart patterns to follow suit with their own breakouts. But other than that, folks, wishing everyone a great trading day out there, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.